Thank you very much for agreeing to let us tell you about our research. So just to clarify for those of you who haven't come across the lab before, so we are part of the Financial Reporting Council. So that's the UK it's the UK authority who is responsible for accounting and auditing standards in the UK. We look after the UK's digital reporting taxonomy. We look after the corporate governance code in the UK. And we also monitor the quality of annual reports as part of our work. So the FRC lab is the kind of innovation and thought leadership space within the FRC. And the idea is that we work on topics where there isn't necessarily guidance or practice hasn't sort of been finalized. And we try and work out what is useful for investors and companies. So over the last few years, we've been doing lots of different work thinking about digital reporting. So we've looked at structured data, we looked at artificial intelligence, we've looked at blockchain, we've looked at virtual reality and augmented reality. And I think what we've understood through all of that research is that interconnected future for corporate reporting really is going to rely on good quality structured data as its base. And it needs that data if it is to do all of the amazing things that it could and we all want it to do. But it really needs that quality information and data. So that's why we decided to look at the introduction of ESEF, and in the UK that's called DTR 4.1.14. So that's the specific rule that UK companies are undertaking. So we looked across a sample of 50 companies. Some of those were within the EU where it was mandatory, some in the non-mandatory areas. And we looked at all 27 files that we had in the UK, which were all voluntary findings. And then broadly what we found was that the digital reporting, even though it's voluntary, a mixture of voluntary and requirement, it didn't really have the care and attention that we would expect for an annual report. So I used to be a preparer. I know that, and I know Karlien has as well. And we know that, the board view the annual report as a kind of key fundamental cornerstone of communication to the market, and investors, focus significantly on both the electronic data that's inside those filings, but also the annual report itself to provide a narrative and a message and give a view of a company. And given that kind of core importance of the annual report, we want to encourage companies to spend that same care and attention that they do on the traditional annual report on this electronic version. So our review highlighted that around 70% of files had some errors, and we divided those errors up, or issues and tips, up into sort of 3 areas. So one is around process, one is around usability and appearance, and the other aspect is around tagging. So my colleague Karlien is now going to walk you through some of our key messages, and then we will be open for questions.
So hi everyone, I'm Karlien Conings. I'm a project manager at the Financial Reporting Lab, and prior to joining the lab I worked on the IFRS taxonomy at the IFRS Foundation. And so I'll just be talking you through our sort of main tips that we set out in the report. So the report is very much aimed at companies and helping them get ready for this new challenge. And so the first sort of section of our report focuses on setting out tips in terms of how companies might set up their processes. So we, in addition to reviewing reports, we also had various conversations with software providers and tagging service providers and companies. And from those conversations, we've tried to sort of summarize the key steps that companies should go through as they set up their process and factors that they should be considering in that process. And so one of the key messages, I guess, is that companies should not underestimate the impact that the requirements have on their processes. We've heard from some that they started off thinking it was just something for the finance department or even the tax department. Some people thought because it's called taxonomy, it should be the tax department. But it really is that whole sort of team that's responsible for the corporate reporting cycle, including company secretaries and investor relations and teams responsible for other parts of the financial report. And also a key factor in sort of deciding your approach is to assess the impact on your timeline. Annual reporting is a very sort of complex and process with very tight deadlines. So in your approach, you should definitely consider sort of, do I want to bolt on the tagging at the end, or do I want to do it in parallel? And also something for a company to consider is the extent to which you outsource the tagging. You probably need to involve some external expertise to sort of get the technical aspects right, but you can never really fully outsource the tagging, because you need that sort of insight in what is being reported, and also the ultimate responsibility for the filing remains with the company. And sort of another factor to consider when you're outsourcing is, of course, supplier risks. Like you're handing over data to an external supplier, if that is market sensitive data, where you need to make sure they've got the right controls in place, and where the data is stored, and also the capacity of your supplier. We've seen that you have certain tagging suppliers that will be servicing a large part of the market all at the same time. So as companies select their suppliers, they need to make sure that they will have the time to deliver. Then another sort of suggestion we made in our report is that companies should consider whether to tag information voluntarily where allowed. So in the UK, for example, companies can consider tagging some additional information voluntarily, like TCFD reporting. We have got our UK FRC taxonomy, and that contains some voluntary tags for TCFD reporting, which is also potentially where the tagging requirements might go in the future. And then overall, we recommend companies to test their approach in advance. They can do so on the basis of a prior year, and we've seen in several jurisdictions, including the UK, the regulator provides a sort of test facility where companies can upload their filings in advance, and then they get the validation results without actually submitting the file. And then the final point on process is that companies need to think about the governance process around the file, because in our review, we found it was often very unclear to what extent there was governance over the tagging, and also to what extent there was assurance, given that the requirements vary by jurisdiction. And yeah, the board should, at least to some extent, be involved in sort of assessing, especially in areas where judgment has been applied in tagging, to make sure that they're sort of satisfied with the tagging overall. Then the second area of our report talks about sort of usability and appearance of the file. Sort of the tagging requirements obviously are more about the machine readable aspect, but the inline XBRL format is meant to serve both the machine reader and the human reader. And the human readable layer can look almost exactly like a nice PDF format and be highly designed. And we've seen some examples of quite nice reports that look exactly like the PDF, but we've also seen some very ugly files that look like nobody had really opened them to check the human readable layer. So there were like random bits of text in weird places, and like graphs that didn't really look right. And so, as Thomas already said, we think that these issues sort of indicate that it comes down to companies not having the right attitude to the file yet in some cases. So they're not yet appreciating that this format is the official version of the annual report, and they need to allow sufficient time to sort of test and review their report output to ensure that it looks right. And especially these files that look strange, like we think a user looking at that file might also sort of question the quality of the underlying data if the human readable layer doesn't even look right, sort of undermining their willingness to use the structured data. And on usability in general, we recommend in our report that companies put the file on their own website with an inline viewer tool so that people can actually see the tags. And then finally, we have a section on tagging. And in that section, we really try to emphasize the point that tagging is not simply a label matching exercise. So it's about ensuring that the accounting meaning of the tag you select matches the meaning of the reported information. And that sort of comes back to that point that you can't fully outsource the tagging, because you really need to know the accounting meaning of what you're reporting, and also what IFRS requirements that you're satisfying with those disclosures. We also briefly talk about extensions in the report, so the need to create custom tags when there's no suitable tag in the core taxonomy. I think we've heard this in a previous presentation as well, that companies really need to make sure that they only create extensions when necessary. But we also try to balance that a bit in our report with, we've seen some cases where companies seem to have sort of tried to avoid creating extensions and sort of shoehorn their disclosures into core taxonomy tags, which is not helpful either. So there's a sort of balance in considering when to create extensions. And then our report also provides a sort of list of common tagging errors that we've seen that companies should be aware of. There are these new errors that they should consider, including using the correct sign is an obvious one, because the sign might not always match what you've got in your paper-based report. So I'll just hand back over to Thomas to sort of conclude.
Thank you very much, Karlien. So broadly, when we think about quality of the reporting, we're thinking about it in these kind of three aspects. So there's the technical quality, which is really about how the file operates. There's the communication quality, which is really focused on that the human readable layer, like Karlien was highlighting, and then the accounting quality, which is really those elements and judgments that have been made in an accounting sense, and whether those are matching and working in the digital sense. And it's really important to have processes and procedures and time to think about each one of these elements, because it's only through considering each of these three elements that we're really going to end up with quality reporting that works. And I guess one of the things that we've been highlighting to companies, and in the UK, the FCA and the FRC wrote a joint letter to companies to highlight this, is that this first set of requirements around digital tagging is fundamental if we are to have a greater ecosystem for digital reporting in future. And we must get this first step right, or otherwise we won't get the investor and other stakeholders using the data, supporting the data, challenging the data that we would do otherwise. And so our work going forward, we're going to be thinking about redoing our review next year to see how files have developed, but we're also going to be undertaking discussions with investors and other users to understand what they are currently doing with the data and what they might do with the data in future, and some of the actions that might need to be undertaken to sort of ensure that kind of overall quality aspect. So that just sort of highlights some of the areas and challenges, and we hope that's been useful. The full report is available for free on the FRC's website, and again, always very happy to engage with people on the results of the findings of the report.
I have a question for Thomas. Thomas, I think this is a problem for learning curve, because I remember that in the Security and Exchange Commission, the academic research say that around 40% of the reports have errors in signs, because that the signs are slightly tricky in accounting. And there are also voices that the rate of errors that have in the Security and Exchange Commission will be a risk for the confidence of the investors in ESEF. What is your opinion about?
Yeah, so I mean, we think in terms of the use of the data by investors, it's going to take a while, right? Because they need a body of data first in order to be able to use it for the trends and their analysis. They need to make sure that and be confident that the data is of sufficient quality, and it needs to have value in terms of the timing. So, you know, these first few steps are kind of replicating data sources that investors already have and already have, you know, some quality processes over. So we think that the sort of later phases of data, as it starts to expand into the notes and it starts to expand into the ESG information, is where it will start to get much more useful and interesting for the investment community. However, we think one of the first areas that people are going to start getting is looking at both the extensions and the metadata they're getting about the quality of the files, because it tells you two things. Firstly, you know, if the file itself is of bad quality, that may flag something about the processes and controls within the organization, and that's not something they often get a view on directly. The other area is around the extensions, and I think, you know, extensions are a particularly interesting area for investors because it's flagging that there's something to look at. You know, there's some reason that the company is identifying it as being you know, a different combination or slightly different from what would be expressed under the standard you know, IFRS taxonomy. So we think that, you know, it's going to be that kind of quality and specific interest that will drive the first sets of reviews for investors. But, you know, 100%, if you don't get the file basic kind of quality controls right, then it's going to say something about the organization. And if it doesn't improve over the longer term, it will impact, you know, the ability of investors to use and rely on the information. So yeah, I mean, quality is key. And I think as well, it's worth companies reflecting on that some of these areas and many of the ones that you identified, actually, you know, these are things that might have been in the paper report before, specifically things like roundings and things not adding up. What's different is now they're really, really obvious to the users because these tools make them really, really obvious. And so, you know, you're putting these things sort of front and center of the user experience.
Mm-hmm. Thank you very much, Thomas. I hope that my colleagues in the IT area may learn, but for me, the experience in XBRL US with a lot of examples, a lot of materials for IT developers is extremely thirsty. Due to, I don't know what circumstances, we lack of that in Europe, but maybe that these experiences may help to the community, and thanks to XBRL International that is preparing guidance for all of us, and also this wonderful filing repository. In my experience, one typical problem in reporting is the lack of test cases. Why? Because create the statements for a company is extremely painful. It's complex. It's extremely complex. And at the end of the day, the reality is that the first year is the testing year, in which everybody prepare the test cases that are their own reports. Even ESMA prepared some test cases 2 or 3 years ago, but this year is basically the year of testing. I hope that the next year everybody has improved the quality.